It is said CFOs should treat compliance more as a differentiator and not just compliance per se. But when the compliance itself is absorbing, big, and complicated, what best the CFOs can do in that scenario? To find out GST and 50 Shades of India Inc., do watch this next session. Let us explore more with Vartika Rawat, Senior Correspondent, ETCFO, moderating this session. Vartika, over to you.
Hello and welcome back. Thank you all for staying connected and for your enthusiastic participation. We really appreciate it. So after listening to industry leaders on how CFOs are strategizing on their sustainability plans, from governance to digital and economic point of view, here we are now, and it's time for our next discussion on GST 50 Shades of India Inc. I'm Vartika Rawat and I will be your host for this panel. So introduction of goods and services tax was a noteworthy step for India Inc. Soon it was expected to significantly ease double taxation and make taxation overall easy for the industries. And for the customers, it would help in reduction of overall tax burden. 4 tax slabs were formed under GST, 5% for essential items, 12% and 18% for standard goods and services, and 28% for luxury and sin tax items. So while this was simple enough, we are now completing 5 years of GST this year. And the industry has realized that even though it eases and smoothens the processes compared to the previous tax regime, it's challenging and has its own compliance burden. Though it simplifies the indirect tax system, the frequent changes in the law causes confusion, show cause notices, and some litigation. So while it is much appreciated tax reform, it does have its 50 shades, which today our veteran leaders of India Inc. are here to discuss with us. So please join me in welcoming Atul Gupta, who's the former president of ICAI, Anurag Bhagania, who's the CFO of SKF India, Venkatesh Tarakkad, CFO of Ecom Express, and Anand Agarwal, who's the CFO of V-Mart Retail. Hello, everyone, and thank you for joining us today. So, we have discussed challenges and areas of simplification many times, but, now the government is actually mulling to bring in GST 2.0. What are your expectations from this revamp, if it happens? And what are the urgent things that need to be addressed for your industry? Let me start with Atul, who can, give us a bird's eye view on this. So, Atul, let's start with you. Yes.
Thank you, Vartika. And as you rightly mentioned, that 1st July 2017 see the historical change in the taxation system of the country, when more than 17 different laws of a central and state level subsumed into the GST, offering a one nation, one tax. So there were a lot of challenges earlier. Not only that there was the multiple compliances we have to follow, there was a cascading effect rather than a double taxation, that there was a cascading effect that the tax on tax was there and you were not getting the credit of certain taxes. Say, for example, for central tax, you are not getting the credit of the state taxes. For service tax, you are not getting the credit of the VAT. Likewise, there were multiple compliances, and then there was a lot of issues related to the definitions per se, that what falls under the definition of manufacturing, job work, trade, service, works contract, and so on. So all these challenges are being well mitigated through the GST. So now we are into the GST, but as I discussed on the various occasions, still a long way to go, that the industry and the even every SSC is presently is being handling with. Now there are the, as you rightly mentioned, the one issue is about the classification, because since it's a new law and the SSCs are yet to understand the classification part, and I believe there will be a lot of litigations which will emerge in the times to come, where around the litigations this classification part is there. So I will say that one aspect which I believe that we should see in the recent future, that there should be the less and less classification issue. There will be the merging of the various product range ranging from 5, 12, 18, and 28, so that the industry should not feel. The another aspect is about that with all the good benefits, that is about the ITC, the input tax credit, when the assessees are facing a lot of challenge per se, that to whom from whom to buy, because if somebody is not the supplier is not paying the tax or is not complying, then the entire burden is shifted to the buyer, and it's a challenge for the buyers to testify the supplier, and always you are living in a fear psychosis that okay, what will happen tomorrow. So these are the two aspects I will touch upon at the initial level. Yes, in the discussion I will be sharing you some other thoughts around that.
Rightly said, sir. Classification issues and ITC challenges. And we will get back to you on the ITC challenges in the subsequent conversation. Anand, what about you? What are your expectations from this revamp for your industry?
Apart from that, I think apart from what Atul just mentioned, I think the biggest problem as an industry that we face is the blockage of cash flow. So from a tax manager to a cash flow manager, I think that's what I would want to, term my tax team, what it has become in the last 5 years. But having said that, I think the other parts is to solve for the ever increasing accumulation of input tax credit. I know there are, various pros and cons of doing that amicably and in a manner which is, more conducive for the assessee. But there are suggestions, there are inputs by the industry bodies, various professionals, which one can consider, and there can be a more fruitful way of solving this. The biggest other change that I would like to really personally see is the shift of the, burden on the taxpayer to prove on the validity of the input tax credit. And especially in the current budget proposals, one would see that there are proposals to make it even harder for assessees to rightfully claim what they have bona fide, purchased in terms of tax. Now that is a slight, in my view, it's a slightly wrong direction to take. Putting a lot of burden on the assessee to prove, the bona fide of the seller. Which in fact takes the entire onus of proving the tax payments in the hands of the purchaser rather than the seller. Now, that's a very big change, and I would strongly want to advocate against that. And thirdly, I think Atul also mentioned about merging of the tax brackets. So while from a academic sense, it definitely does make a lot of sense, because GST essentially was one nation, one tax. But looking at the diversity and the problems that a large parts of India, both in terms of demographics as well as geographics face, I think it will be very onerous for the consuming class, especially the middle class and the poorer class, to move from 5% to 12% in an era of very, very high inflation. So these are the three, points that I would like to discuss more, but I look forward to a bigger discussion around these. Thank you.
Right, and very valid points you've put forward, Anand. And we are going to discuss on those later on. Venkatesh, what about you? What are those urgent things that needs to be addressed for your industry point of view?
First of all, just to also share that we are from the service industry, and for us, the pain points are relatively less compared to manufacturing, retail, etc. I come from the apparel retail, where we had significant issues. I don't have to worry about inverted duty and multiple things over the years. So I think it's been overall positivities we are seeing. We are a new age logistics provider operating across the country. In such a scenario, this has really eased the way of doing business. So I think I'm more representative of the positive side. Having said that, see, we operate in smaller places, tier 3, tier 4, across the country, etc. Here, this onus of us having to provide roof, or rather not be having our credit getting blocked because of our suppliers not filing the returns is quite an irritant. So, and then I'm coming from a very positive side. Even then, I'm saying it's the whole premise of GST was to evolve to a more trust-based system. I am actually even now concerned that with these new regulations, we are moving away from that. Hopefully, it is not start of license Raj 2 again. This is what I'm concerned about. Assessments and or rather say audits have only just started. There also we are feeling some of the brunt that the mindset of the people have not changed. There are people who don't seem to have been given enough training in the department itself about what the law states, about what the approach should be, how they should be interacting with the SSCs, etc. So I hope these things get sorted out, and otherwise we would be on a good place to let the economy grow more seamlessly. Digitization is another thing which we are looking forward to. You have e-invoicing, you have e-way bills, you don't need these multiple things. There are checkposts where still people are getting asked for physical invoices throughout. Now when I deliver one of our truckloads has hundreds of shipments. Imagine asking for individual shipment level physical copy invoices, etc. So there are a lot of these procedural things which we are hoping to get solved, and I hope to get into the other topics of discussion in these subsequent minutes.
Sure, sir. I hope someone from the GST Council is listening to this discussion right now. But let's move to Anurag now. Anurag, what are those urgent things that you think that need to be addressed from your industry point of view?
Vartika, thank you. And I kind of fully agree with the views expressed by the rest of the panel here. I think Atul, Anand, Venkatesh all had very valuable inputs. I see this really in three ways. The first is, I think it's a significant, strategic, and very, very futuristic step. The journey that we've started as a country, the journey that the finance minister 5 years back thought is something that we have to take a step in that direction, is absolutely the right thing. Ease of doing business, trying to simplify things, using data more than paper, and just using automation in a way that this country can really change the way business is done is really the right thing to do. So that's the positive side of it. But we are also realizing that in execution, somewhere there is a dilemma that government is going through. The dilemma of coming out of license Raj and the dilemma of moving to a much more, ease of doing business. And that dilemma shows in some ways. And those are the ones that I think really need, to be addressed in GST 2.0. So some examples, I think, Anand talked about it, Atul talked about it, but just to add, the first I would say is the inverted duty structure. There are industries, there are businesses that we are really wanting to give a lot of focus to. Let's say, for example, solar, wind, renewable power. The output is at a lower tax rate, but the input is a much higher tax rate. So clearly needs a substantial shift in that direction. The second, I would say, on the one hand, we are wanting to make it paperless, but in execution, we continue to ask for paper. It's very depressing. It is very, very, confusing to the person on the ground to understand why, we cannot move completely in a certain direction. So that signal has to be clear to the people on the ground. And third, of course, and folks have talked about it earlier, the dependence on the assessee to prove the credentials of the supplier is clearly not, something that we really want. GST should take that direction. For example, just a vendor not being compliant. I mean, why am I being held responsible for a vendor non-compliance? And I think, the fact that a tax manager now is becoming kind of a data scientist on the GST portal is a good welcome change. But at the same time, I think it's also the frequent changes that we are seeing, which is causing us not to completely automate. So those are 3 or 4, I would say, broad changes that I would say we certainly want. And I am hoping, just as you are, that somebody from the GST Council is hearing us.
All right, but you've one sentence that you've said is catches my fancy, which is that why am I being held responsible for vendor non-compliance? So all three of the CFOs have pointed out the same concern, and on that note, I'll just move to Atul and I'll ask him that in Finance Bill 2022 there were 6 conditions that were put for input tax credit, and tasking the recipient with the responsibility of ensuring supplier compliance. So it is, we know that it is an attempt to catch fraudsters, but while India Inc is facing this big issue of input tax credit, where Anand has also pointed out certain points on ITC getting accumulated and the working capital being blocked. So we would like to understand from you that, do you think that these rules are inculcating a trust-based governance, or they are simply draconian for honest taxpayers? And from your perspective, what are your concerns that GST Council should address here?
Vartika, I will not say that it's draconian or it's trust or something else, but I will try to convey to the audience through this platform that earlier there were the 8 requirements that before you are claiming the credit. So the credit should be related to your business. You should have the valid document. You should have received the goods or services per se. The supplier has paid the tax. You are filing your returns regularly. The 6th one, that okay, you are paying within 180 days. Then there is no block credit. You have to follow the rule 42 in case you are dealing in a taxable or a exempted goods. Now with the this new insertion of section 38, you are talking about the 6 new requirements, practically making it's very, very difficult for the recipient to take note of all the compliances which are being made by the suppliers. So I'm aware that this all psychosis which is working around this is to see that how much evasions happening in the country. So you will say, you will be always a pro revenue side that, okay, yes, if I would be on that position, I will also try to struggle out that, okay, what should we do to protect the revenue per se. But what is happening in that pretext, which will be a foundation, that we are actually creating a challenge for all the 97% guys who are actually well compliant. So for maybe a 1% guy or a 2% guy, the entire ecosystem is getting, I will say, pressurized that, okay, you have to do all these things. So maybe we can do some kind of, for example, the data mining, which Anurag mentioned that this, our tax guys are doing. Maybe the department would do a lot of data mining in such a way that it will offer a trust-based environment for the normal suppliers who are doing all these good things. There are the other way that we can do this. And even when Anurag mentioned or some other colleagues mentioned that, okay, the audits just started and the way that they are being handled, I can tell you that the provisions, for example, I'm sharing with you that the provisions say, for example, that in case there is a fraud, there is a evasion of a tax for more than ₹5 crores, there is a provision related to arrest. Now, in case we are saying, for example, I'm just sharing with you that the attachment of the properties, even in case there is adjudication pending, for example, somebody is not aware whether the classification of 5% will be applicable or a 12% will be applicable, and the liability cross that threshold, then also you can, your properties can be attached. Somebody, the department will say you can be arrested, whether the provisions are there or not. But they will say no, because there is, I will say it's evasion. So the subjectivity around this, all these 14 requirement actually creates a trouble in my mind, rather than it is being used for the purpose they are being introduced. So it's not that, okay, the 14 provisions will be too much difficult to follow. Actually, the subjectivity around these 14 provisions is actually creates a disturbance in my mind.
I think if I were just to add to what Atul just said, and in the spirit of the law, I think the difference what we are seeing is between the niyat and the niti. So the intention and the legislature. So while the intention was always to keep it very simple and trust-based, but the actual legislature, which is supposed to support that intention, is falling apart. And it's a very wrong precedent that we are trying to set by ensuring or giving unprecedented powers to the officers, which in fact Abhishek, Anurag also pointed out that the field officers need a lot of training in the current state of affairs. But with these arbitrary and very subjective powers, God only knows how these will actually get utilized. And because of a few, let's say, mistakes done by somebody, the larger part of the ecosystem might suffer, and that's the bigger worry.
Right. Yes, Anurag, you have something to say.
Yeah, can I just add, Vartika, because I got really excited by the term that Anand used, niyat versus niti. And I have a very interesting example, and maybe it is different from the rest of the panel because I have some government business. In the government business, there is an introduction of a TDS on GST, which essentially means that if I have a customer who is a government, I'm selling to him, I'm paying GST, but then this customer of mine will also deduct TDS on that GST. I mean, think about it. How is that in any way in the spirit of the law? The spirit of the law is that you are charging GST as an SSE, you are paying that GST. Now, if you add the element of TDS, and that too with a government customer who by themselves, by design, have complicated processes and lack of clear visibility about who I should go and ask, whether my TDS is showing up on the GST portal or not, it's going to be extremely complicated. All of that is sitting as additional cash burden on the entire system. I think, just simple things like that clearly need an attention from the GST Council is what I would say.
Right. So intention is there, but the legislation needs to align with that intention. Rightly put, gentlemen. So, on the ITC issue only, I'll move to Anand, and I would like to ask you that, considering the calculation hassles, many companies have been taking GST credit for only matched invoices. So, how should CFOs deal with such issues and enable the recovery of GST on mismatched invoices as well?
You've really touched a very sore point. But, I was just remembering there's a proverb, marriages are made in heaven. But GST is also forced us to force match compliance status of our vendors to have a trouble-free trading relationships. And it's really become, like matching a Janampatri on the GSTN portal. While the GST mechanism actually is very well thought of and has definitely eased, business from a macro perspective, but still it has its own nuances. And I would say unmatched invoices still remain the biggest cash flow blocker for all businesses. It's been a very common practice for companies to take GST credit for only matched invoices, while earlier there was a provision of taking up to 20% buffer credit, which eventually was reduced to zero. Now, I think the bigger problem really has been, as Anurag also mentioned, been a really few short-sighted and dishonest tax assessees who time and again created a need for a far more stricter government policy, leading to bigger compliance burden for the larger pool, and has also contributed in transforming what was a good and simple tax to a compliance-heavy, complicated set of difficult-to-understand structures. In any case, I would say there are far stricter norms now introduced in this budget to even go a step higher on compliance, as Atul was just talking about, higher on compliance and allow credit of only pre-populated invoices on the GSTN portal. And a lot more restrictions have been placed on the compliance status of the supplier before one can even think of taking input credits. I'm sure we are in for far more interesting times as these new proposals get notified and actioned. This all actually leads us to making us even more sure of our suppliers' business ethics and compliance structures. As a company, We have tried to achieve this by ensuring that we work largely with pre-validated compliant vendors, apart from making sure that both our IT systems are well synced to pre-warn us of any possible, issues, etc. But this also necessitates a very robust and regular reconciliation exercise with all our vendors. And we also have implemented, a rewards or a fine system for remaining compliant for them. Obviously, this all adds up to cost and more efforts. But in the current context, this becomes very important as we move towards a seamless digital economy, where the the enterprise or the organization expects transaction closure to be even more faster and smoother. Actually, taking credit of GST, from mismatched invoices still remain a Herculean task, with manual follow-ups with vendors and reconciliations. Since any amendments to the 3B are not possible, one really has to wait for the supplier to upload the rectifications in the next month's returns. And if all is well, then take the credit next month. Now, if anything, GST has definitely made my tax team realize the importance of cash flow so much more, and become more of data scientists and cash flow managers than just being a tax planner. So it's definitely become onerous, but I'm sure as we move forward with these suggestions and a lot more inputs, we should see something better coming out of it.
Right. So Venkatesh, let me come to you. We've heard Anand talk about the ways that he has designed for his own team and to deal with the mismatched invoices. But what are the steps that CFOs can implement to ring fence the risk of loss of credit? Including contractual changes to enable companies to recover unpaid GST amounts, vendor diligence, and tools that can, provide vendor compliance ratings. Anand said that, there are rewards and penalties that they are offering. But, what's happening in your case?
So actually, what we've started doing is first is our operations team have also become taxation experts. So anybody interacting with vendors, the first thing is they already know that when you're speaking to vendors, make sure you communicate the topic of compliance to them. That is the one. And then, of course, the tax team supports. So we make this clear upfront. We try to check the credentials of the vendors, small or big, prior to entering into negotiations with them. We actually also hold a lot of camps, supplier meetings, to explain to them the importance of being compliant, filing returns correctly. We are explaining to them the issue about the working capital blockage which we face. All that we continue to even before we start the process. And then secondly, what we've also done is, like, now all the teams have become data science specialists, like how Anand says. There is continuous focus on reconciliations on an ongoing basis to see. We found it worthwhile to have a separate person or persons monitoring this on a regular basis, and not wait for a month, 2 months, 3 months, quarter, etc. to pass by. So that we do on a continuous basis. So we have this negotiation going on, and it has helped us. So to be fair, over the last few years, we've seen this last couple of years, we've seen the improvements in the mindset of our vendors also. So that has been happening. We still face a challenge for really small vendors, because remember, even for those guys, for example, below 5 crores, they can file quarterly, etc. And then when I do small vendors in really small cities, we are finding it difficult. Now, we are generating employment, we are creating business for them, but I am punished for that. So that is something I think the government should look at. And e-invoicing, for example, will speed up this process quite significantly, is what we feel. So these are some of the compliance related. As far as holding back payments is concerned, there is a double-edged sword. So for example, even in the official statements itself, government is saying you may consider holding back the GST portion, etc. Now remember, there's also a contradictory MSME Act which says you can't hold back payments more than 45 days. And there are some, like for example, okay, we are not yet a listed company, but we have our own compliance governance framework which we report to our independent board, etc. So there, that thing comes about, MSME dues. So how do you reconcile these things? So there are these questions which we keep asking ourselves. We have a dedicated team. I would encourage all others also to do that. It really helps. At the same time, we keep representing to government to make sure that these processes are simplified. That's what I would say.
Thank you for your inputs. Very, very articulatedly put, sir. And, Atul raised his hands. He wants to add anything, please.
So, Vartika, I just suggest to the industry and all the CFOs through your forum that the three important aspects which are very, very important when we are talking about the mismatch. That one, that we should be maintaining a good ITC register. So what is happening that in case you are maintaining a good ITC register, which can not only see the compliance as required under Section 35, but also giving you a lot of comfort, whether it's a 180 days tracking, whether it is a Rule 42, 43 tracking, block credit tracking, but also that can help the industry to see that what are the credits which are actually matched with the 2B or which are not matched, so that next month or maybe the coming months, somebody can have an auto reconciliation available with them. So one is the ITC register, I will suggest. The second one is about the kind of a rating, compliance rating, which Venkatesh mentioned, that it should be coming from a data mining in such a way that whenever you are entering into, actually Vartika, please try to understand everybody that it's a new law, a new transition, new way of doing business. So what will happen that in this entire process, the guys who are actually non-compliant will be getting, actually they will be coming on the surface that, okay, since these guys are not complying with, so there may be a case that, okay, somebody is committing some mistake, that because of a human mistakes are there, but the guys who are actually mischief kind of a situations are there, they are getting coming on the surface and getting catch hold by the kind of a situation which emerged out. Yes, it's a troubling, because in the initial stage you are have to have a lot of compliances we are talking about. And the third and the last aspect which I wish to touch upon, which Venkatesh just mentioned, that at times even I raised when I was there before the parliamentary committee, that these 3 months, somebody filing one monthly, somebody filing 3 monthly. Yes, there is a facility of uploading the invoice, QRMP and all these things are there. But for a small guy who is not aware about the compliances, filing the return 3 months and then filing the uploading the invoices on a regular basis, actually making even more difficult for the guy that, okay, who is a small MSME, which is actually giving a lot of contribution to the GDP and the employment sector. So either it will be, so I will say, I will recommend, let us make it monthly itself, no problem. Yes, there will be a burden, but at least somebody will have a, I will say that, okay, I have to comply this, I will. But otherwise what will happen, the large guys will stop buying from me, then there will be a larger, bigger problem as compared to that, okay, the GST filing is there.
Right. So, all of you have rightly put it, and we know that, the government is in lieu of making a compliant ecosystem and, encouraging everyone to comply. Such kind of, rules are also there where, where we ask for vendor compliance as well. So, they're putting the onus on the supplier as well. Also, you very rightly put, Atul, and we totally agree with you. On that note, I'll come to Anurag. And Anurag, I just want to, explore this with you that, how much has e-invoicing helped businesses reduce the reconciliation burden?
Yeah, Vartika. So I would say, certainly a step in the right direction. I think we've been talking about it and trying to pinpoint the areas of improvement. Never at all it should be construed as everything is wrong. I think the direction is certainly right. The change is absolutely important, and the change is helpful. So I think let me put that fact straight first. And one such example is e-invoicing. I think, except the fact that there is a transitionary effort, the overall process certainly enables a lot more control and transparency, including auto reconciliation, as far as the invoicing leg of the activity is concerned. I do agree there were initial challenges, delays on generating the QR code, lack of ability to integrate to the SAP system because there is two-way data exchange. No organization would be interested in doing all that. But I think essentially the transition or the change is helpful, both in terms of the direction that we are taking, as well as in terms of the fact that, it is easing out a significant amount of burden out of the reconciliation activity is the way I would put it.
But I'll just add to what Anurag said. While the e-invoicing system definitely has been a great boon, there is no, two ways about it. I think till the time everything is going all right, there's no challenge. But, once you have a problem and, there is a reconciliation issue, then the amount of effort it takes to reconcile or to rectify that error, whether intentional or unintentional, just takes too much of a toll. And just the fact that there are no rectification possible on the portal or in the returns, and you actually have to wait for the next quarter. And, especially in the case of smaller taxpayers, where the return filing is, quarterly, it just takes away too much of time and effort to keep following up and reconciling and, wait for 6 months to get it all right. The second part also on the invoicing part has been, the B2C. So B2C part of the invoicing is still not, fully in place. And that is where the biggest, or the most amounts of frauds happen. So from a compliance or a governance angle, I think that is one area where the council may just want to have a relook and see how, they may want to ease that burden. And then probably that can ease away some part in the B2C or, the B2B part, which we have always sort of complained about.
Atul.
Yeah, Anand, just to share my audience here that in case the B2B is applicable on me, my threshold turnover is more than 50 crores. So it's purely on me that in case I can integrate my system, then I can generate the B2C invoice as an e-invoice as well. So I believe that it is actually the decision of the SSC, the supplier to decide whether he want to go for 100% B2 this e-invoicing or maybe a bundle of physical invoice vis-a-vis the invoice which we are discussing. And number two, just to share with the Anurag and to you, Anand, that actually the mechanism actually works like this, that whenever there is a mistake, whenever there is a intentional or unintentional mistake, I will say unintentional because the intentional are not the mistakes, they are the frauds being committed. So in case there is a unintentional mistakes are there, the return mechanism is designed in such a way that there will not be going back that, okay, you are changing your previous return. Why I'm saying so? Because once you have matched with the 2B, you have claimed the credit. Tomorrow, if I will change my return, I will revise my earlier return. Then what will happen? Again, there will be a trouble for you because your earlier match 2B will have an impact. So that's why there is always a progressive change which is being offered in the system, that in case you want to rectify your mistake, you please do in the next month, so that at least up to that level, up to the period where the ITC has been matched with the 2B, should not be getting from a backward that, okay, somebody is changing his old return and then you have to again do the exercise. So either you can issue a credit note, which is again, so when it was being planned, so I was part of this entire planning exercise originally. So it was planned in a way that it should not be that, okay, again and again you are going back and do the rectification. And that's why it was being proposed that only the prospective changes you can do in the next month return, just to set the expectations right, because wherever there are the challenges, I can share. But as rightly mentioned by Anurag, that this is, I will say, I will love the GST. But only point is that I have the pain where I feel that, okay, the intention vis-a-vis the actual executions have the different perspective.
Right. So e-invoicing is a step in the right direction, is reducing reconciliation burden until there is a trouble, until there's a challenge. But there are progressive steps that are being taken in that direction. On that note, I'll come to the CFOs, and I would like to ask them that, we discussed a lot of challenges here, the challenges that we are facing personally in our organization. But what are those onerous GST compliance issues that you are facing, and what is the quantifiable impact that you're witnessing, that that you're comfortable sharing with us for our understanding?
So if I may start off, I think it is extremely important for industry and specialists like Atul, etc., to represent to the government on the audit part. I am actually quite scared, actually. We've had just 4 states where the audits have started for 17-18, and the initial interaction has been actually not good at all in terms of how the approaches of the government of the authorities is. So this is something I think worth discussing upfront to have the process streamlined. Also, even the authorities have to realize that 17, 18, 18, 19, and 19, 20, even for industry was also transition times, rules of government were also evolving, etc. So there could have also been clerical errors, I mean, in good faith. So all these, when it gets mixed with the powers which the authorities have, is quite a scary one. So this is something which I think we need to look at. The government needs to also give some time for industry, give leeway, especially when you realize that a large portion of the revenue which is generated is coming from pretty compliant ones. So for the balance 3 to 5%, let's not put on burden on them. So that is a key one which right now I am a bit concerned about. We have actual cases where demands have been raised ad hoc on that. So that is something which I would like to place to the group.
Anurag, what about you? What are those onerous compliance issues that you are facing, and which you can share with us the quantifiable impact that you're witnessing?
Yeah, so Vartika, I think in addition to what Venkatesh has mentioned, I think the 2 or 3 onerous issues certainly revolve around physical documentation. I would say that is really, an unfair and unjustified expectation. The quality of documentation that is expected to be maintained, on top of the fact that it is a futuristic law, I think really is creating huge gap in terms of expectation by the implementing authorities versus what the law intent is. So that's one. Second, I would say, in terms of the demands that are getting generated, I would have to refrain from quantifying it. I apologize for that, but we have certain disclosure norms, and since it's a listed enterprise, we will not be able to quantify that unless we first had to do that to the stock exchange. So I would like to refrain that.
All right. Anand, what about you? What are those onerous GST issues that you are facing, and what is the quantifiable impact that you are witnessing that you are comfortable sharing with us?
I think it's nothing different from what Atul or Abhishek, Anurag or Venkat just mentioned. But I think the bigger part always has been, and it's true for almost every SC, has been the cash flow stuck in ITC. There are various forms, there are various nuances around that. But at the end of the day, it is the amount of effort that it requires to take my rightful cash or my rightful credit adjusted or set off against my dues, which takes away too much amount of time or too much amount of efforts just to get a very simple thing done. Obviously, I understand, and as Atul was also mentioning that he had been part of the planning team originally. From the intent perspective, it might all be very fair and very correct. But at the end of the day, it is for the SSC to really assess what really is troubling him. And for us, if cash is a problem, it becomes a very big onerous point. The other part, I think, has been in the last 1 year, a lot of taxpayers have started to receive notices and summons In view of the fact that still a large part of the implementation team in the GST administration itself is not very well trained or very well adept to the real nitty-gritties of the law itself, it becomes extremely onerous to go and substantiate to them how or why things should not be seen in the way that they are seeing it. And this obviously would lead to more litigation and more problems as the years go by. The third part also, has been the entire change in notifications and change in, there have been numerous notifications which have been issued. And if I go back to the early part of the GST, implementation cycle, it was called as a Twitter tax. There were more notifications coming in through Twitter than on the the websites. So it's become very unstable. It's always been that there will be a change which will be announced and it will be supposed to act upon it retrospectively or immediately from there on. Now all of this, while this again may have good intent, but leads to some amount of complication in terms of the way we are able to implement it. And that is not leaving a very good taste. Obviously we are all very subscribed to the idea of GST and we want it to succeed, but obviously with small changes here and there, it can make life more simpler for all of us.
Right. Atul, I want to ask you here that, how should CFOs deal with the vague and complicated compliance under GST? How can CFOs ensure that summons and notices are avoided under GST non-compliance? So 2 questions I'm asking you here.
Vartika, first of all, when we are talking about the summons and other things, I believe that nobody can stop. Because if the department feels that there is a mismatch, there is a variation in the claiming of the credit or otherwise, also they are bound to come. So I believe that we should not be worried about the summon in case we are fully the compliant per se. We have all the documents available. So I will say that prevention is better than cure. So what we should do, that we should do a lot of preventive aspect. While as a CFO, we are working in the company or anybody who is doing this compliance job. The first one, as I shared with you earlier also, that the ITC register, because what I'm trying to convey to all my colleagues here, that today my sales, my entire supply side is getting reported through the line item in the GSTR 1. Now the credit getting reflected in 2B. So what the ultimately department is looking for, whenever they will come, either there will be some classification issue or there will be some kind of a mismatch or a ITC register issue. Say, for example, they are looking for a 180 days compliance or the credit claimed in the proportion or not, the block credits are. So since I'm dealing in the subject from the last 20 years, I'm aware that the rule 21D, that is the reverse charge you have to pay in the GATA, the non-compliance was there in 2016-17 even by the SSC. So but I will say that in case you are maintaining a good ITC register with all the necessary columns, all the compliance part which is there, yes, for that a lot of training is required. So what I will say to Anand, Venkatesh, even to Anurag and everybody, that it's very, very important that not only our team is doing the job, they have to be empowered as well in terms of the knowledge capabilities. So there should be a regular kind of a trainings, regular kind of a knowledge sharing, knowledge pools should be developed in such a way that they are aware that how to do this compliance, how to maintain this ITC register. Then the another part is I mentioned is a vendor rating. That okay, by having the data mining with the data which is available through the GSP, ASP from the GST, and they can do a lot of vendor rating per se, that okay, not only on the first time adoption of the vendor, that the vendor registration when they are doing, but also on a later also, maybe a 3 monthly or 6 monthly, a vendor rating kind of a things can also help them that okay, they are actually better equipped. The another aspect which I will share, that the question you have not asked from me, that maybe the few steps which we can propose to the government that okay, they should be doing. So I will say a very small step that okay, the 12 and 18 merger. So maybe that I will be, because the time is not there to discuss in detail, but a merger of 12 and 18 into maybe of 15% or something like that, or maybe on a 18%. So actually only the essential goods and the sin goods you mentioned about, or the luxury goods you mentioned about, which will be small, maybe the 5% of the entire ecosystem, which will remain out of the 18% or a 15% slab, but rest of the things. Because if you will check any portal or any repository of the litigations of the excise regime, you will find the 70% cases on the classification. So actually that not has started yet. So right now we are only discussing about the ITC and ITC, fake invoice, this invoice, that invoice. Actually the real now the game starts when the department will come and say classification issue. So I believe that it's not I can give you a very light example that this tamarind, the tamarind with moisture is classified under the 0% rate, and the dry tamarind classified under the 5%. So if it will start from Kerala, it will be a moisture tamarind, and if it will reach to Delhi after 10 days, it will be a dry tamarind, and the rate will change. So this kind of a scenario will emerge in the different sectors, So this is one I just wish to share from this platform, that there should be an endeavor that the less and less classification issue should be there in the times to come, to have a feel-good factor for the entire system. The number two, which I will share, that let us have some mechanism being developed, that how to mitigate the challenges which are being getting developed over a period of time related to the ITC. So I'm not saying that we should not be pro-revenue, the evasion should be there, the fraud should be there. No, nobody should be spared who is doing a fraud or a evasion. But at the same time, you have to create an environment of a trust.
Right. So very rightly put, sir. And, on the classification issue, let me come to Anand and, let me ask you that, taxpayers continue to face classification ambiguities, and, it has a direct impact on pricing as well as, and the availability of goods and services. So while the union government rules mulls a centralized advance authority ruling system to prevent the contradictory rulings, what has been your experience, and why should this be expedited?
Atul just talked about it, but I'll just add a tad bit more. Changing of rates across categories, whether by law or due to interpretation issues, has been a very difficult experience, obviously leading to high compliance costs, supply chain issues, and in fact, even more challenges in ensuring supplies for end customers. But this was more of a problem in the first few years, and definitely the challenge has lessened now, at least on the rate change part, because we've not seen too much rate changes happening in the last at least 2 years. But the interpretation issues, as Atul was just talking about, they are actually yet to start, and therefore the litigation around that is definitely not ruled out. But on the rate change, I think the big impending issue has been the issue of a rate change of 5% to 12% pending for apparel, and that actually, because it's my home category and my company's bread and butter, this implementation was postponed at the last moment just 2 months back. And on a lighter note, situations such as these actually make the job of a CFO much richer with stress, and provide us with a lot more experience in managing uncertainties, apart from creating more business for tax consultants and sometimes also doctors. Just keeps the overall economy ticking. But otherwise, I would say the rate change also happens due to clarity or the lack of it on choosing the right HSN codes. But with 6-digit HSN being now mandatory, it has become far less ambiguous. But still, problems do persist due to different interpretations by different suppliers, etc. We've had our share of the problems, but over the years actually have improved our IT systems and supplier interfaces to ensure that there is no difference, at least on this account. While we have as yet not resorted to take any advanced rulings, but industry peers continue to face problems around contradictory advanced rulings. As you would be aware, the advanced ruling mechanism is entirely state-based. Now, setting up of advanced ruling authorities at different states has created more confusion than bringing clarity on the GST issues. The industry has been demanding a national advanced ruling authority, which should be considered and implemented quickly to reduce the rising litigations with companies rushing to high courts to get certainty on litigious issues. I believe almost 1,500 advanced rulings have been issued collectively by the various states but the dust is yet to be settled as a large number of issues still lie pending with the high courts. Thereby, I would still, advocate for a slightly higher authority or a central authority which can adjudicate and make things more simpler for the SSCs.
I wish I could touch upon more topics with this excellent panel who have, candidly and, very lightheartedly discussed some really crucial and important points that, the industry is facing when it comes to the GST tax reform. But this brings us towards the end of the session. And, we would like to understand from all of you in short 1 to 2 minutes concluding remarks, about 50 Shades of India Inc. when it comes to GST. What would be your expectations for ease of doing business? So let's start with Atul.
I will say, Vartika, we have discussed much, and I believe that the way that the GST is making our products internationally competitive, I will say the concept as a concept, the 100% points to the GST. Yes, something about the classification, something about the ecosystem of litigation, more accountability of the field officers can bring the change which we are actually aspiring for. So these 3-4 steps, and you will get even on the compliance side, you will get the 100% marks.
Right, Venkatesh.
So a couple of things. First is, I think let's make use of digitization to the extent possible. There is no harm in taking examples even from China, who's not exactly popular right now, where the e-invoicing works fantastically. The government has spread it across even up to small businesses, use that to reduce the burden of filing registers, etc. And also allowed digital invoices to be used with vehicles, etc. across. It will speed up things. The most important thing which I would like to say is trust. We made a lot of progress in the last 5 years. There is positivity among businesses in terms of how GST has been implemented. There will always be improvements, but this trust should not go away. This is why the government needs to put in efforts, make communication within the authorities to ensure that the audits, assessments which are going on, there is I would say, a very conducive and an environment which is amenable to discussions and not one day.
Anurag.
I'll just like to say, Vartika, if we can bring one change, the tax authority can have service orientation. The moment they start looking at the SSA as somebody they are serving. So it starts from, having trust. It starts from having, better governance around data. The way they interact with the SSE, all that will come in that big basket. So just the customer service orientation for that organization is going to be big shift that we are all looking forward to.
All right. And Anand, what about you?
I can only say that, from sales tax to service tax to VAT to GST, it's been a gradual but a very progressive evolution. GST may not be the best answer to all our problems, but given a choice, I would like to contribute to make it even more better. And from the way I look at things, there are 4 things that I would definitely want to, include in the next draft. One is, there should be a mechanism officially to listen more from the industry and imbibe the collective feedback. I'm sure the finance ministry is doing a great job, and as industry bodies we do participate in giving a lot of feedback, but there should be an official mechanism to get this addressed. The second, I would say, is the trust part, where the onus of giving the proof or proving that I am the rightful claimant of this input tax has to be done away with. It's very cumbersome and very difficult for the long term. Third part, I would say, is to keep GST really meant for Bharat, not for India. It has to be more digitized, it has to be more transparent, and we have to keep the rates low. We can't go on increasing the rates in the garb of having one nation, one tax. The large part of Bharat still is very poor, it still lives in rural, and we can't move from a 5% regime to 15% regime for this class to really thrive and embody this. So these are the biggest improvements, or I would say, changes that I would like to see if we have to make this even more successful.
All right. So some really some issues that have been there since the implementation of GST, and some new issues that have come up. We discussed it all, and we discussed the way forward, and what is India Inc expecting if a revamp happens. So thank you so much. This has been really great. And I would like to thank you all for invigorating discussion, and the participant for continuously showing your support by staying tuned with us at our third edition of ETCFO Leadership Summit 2022. So thank you so much. Thank you all.
Thank you.
Thank you.
Thank you, panelists, for your candid yet critical conversation. Your experience and wisdom are learning and lessons for many of the participants here. Now let's move on to the next session for more learnings.